John Higgins, Mortgage One. Happy Monday, and more importantly, Happy New Year. Hopefully you had a great holiday season. We're able to spend that with your family. I thought we'd take a look back at 2025 and kind of see where we've been and maybe get an indication of where things could go in 2026. We know 2025 was not a great year when it came to home sales. We're at a 30-year low. We'll blame most of that on the rate lock phenomenon, where people are just unwilling to bring their home to market. As we look at what we saw during 2025, the latter part of the year, we did see home prices come down a little bit. Nationally, we probably off the peak down about 1.5% from the middle of the year. And we did see listings increase. So although nobody likes to see home prices come down, it certainly is going to help affordability, and more listings means more sales. And that's a great trend that we're seeing. What is going to get affordability back in line? Well, lower interest rates will certainly will help a lot. Lower mortgage rates in conjunction with a maybe flat housing market as far as prices go, and increased wages, which we've seen. The employment numbers that we saw at the end of the year were actually quite good. That will lead to, I think, a more equilibrium based market where buyers and sellers will actually be able to make moves and afford the house that they're trying to buy. When we look at where we're at as far as interest rates closing out the year, well, the 10-year Treasury has really stuck between that 4 and 420 number. We're at 418 as of this morning. Not great, but when we look at where mortgage interest rates are, even though the 10-year Treasury is not at its best levels, mortgage rates are, and we'll attribute that to this thing called spread. So that's the difference between the 10-year Treasury and mortgage-backed securities. If that narrows, then our interest rates on mortgages get better. And we're at 615 here to finish the year, and that is the best level we've seen all year. If we get the 10-year Treasury to break below 4% and the spreads continue to improve, well, that could really be a mix that would lead to breaking that affordability conundrum that we've had with our buyers, and hopefully will force more sellers out. On that, I wanted to kind of end with some of the tools that I have to offer and maybe some ideas that you can take to your sellers and your buyers. I've mentioned our Move To Marketing Studio many times. It's a great platform to help you get your listings on TV. Certainly include that in your listing presentation. Tell your sellers that we're going to get that listing on TV. We create a ton of great marketing material for you, including video trailers, audio tours, digital property cards. We have a killer open house app to capture your visitors' information, and much, much more. Would love to help you with the marketing, take some of that pressure off you and let us do that. It's a very templated program, a lot of AI in it. It's getting better every day, and would love to help you on the marketing side. Also, we have a tool called our ProSnap app. It is a co-branded app that allows you to share with your prospective buyers. I know that when you're talking to somebody about potentially buying a home and getting pre-approved, their interest is never higher than the moment you get off the phone with them. If you can have a tool that you could share with that buyer, have them immediately start the pre-approval process. We get to those pre-approvals same day. There is no cost to your client. There's no cost to you on this. We do free mortgage pre-approvals, and we'll get that done right away. I also wanted to bring out some great programs that maybe you were aware of, maybe you weren't. Of course, first-time home buyers has been a decent part of the market. Fannie Mae has a home buyer grant up to $2,500 for certain first-time home buyers. Mishta, of course, offers their $10,000 down payment assistance program, one of the most popular in the state. If you work with investors, there's this mortgage called the DSCR that you may have heard of. This is the debt service coverage ratio mortgage. It really is a no-doc mortgage or no income verification mortgage. All we need is title commitment, the appraisal, signed docs, and that's pretty much it. We're qualifying based on the rent that the property brings in, and it's a really cool tool for your investors that don't want to give tax returns and all the other documentation. Remember, when you're talking to your prospective buyer clients, we do loans down to $580 on our government insured mortgages. Don't require a large down payment. The rural development is 0, along with VA. FHA, of course, is at 3.5%. And then for your clients that are looking for a good deal, if they find a home that needs a bit of updating, maybe some repairs and that, Fannie Mae has a home style renovation. This is a conventional mortgage that offers pretty much an unlimited amount of money up to the conforming loan limit over 800,000 to get renovations done. So we know that affordability is an issue. If your buyer finds a home and it needs quite a bit of work, we can finance that work as part of the transaction. It's all funded at closing with the work to be done afterwards. All kinds of creative ways to get someone into a home. So we'd love to work with you on your listings, trying to both get new listings and market those, and then with your buyer leads that you have and try to get those qualified. Love to make 2026 a great year. Again, Happy New Year. We'll talk to you next week.